All right, let's get right into it. We're looking at RZLV stock, which has just had an absolutely explosive week. And the big question everyone is asking is, what's driving this and what happens next? I mean, first off, just look at this number. We're talking about a nearly 25% gain in a single week. A move that sharp, that aggressive, well, that doesn't just happen randomly. It's a huge signal that something fundamental has shifted in how the market sees this stock. So this really brings us to the core of what we're digging into today. Was this just a flash in the pan, some weird random blip on the screen, or are we actually seeing the first wave of a coordinated push by retail traders to really take control of this thing?
To even begin to answer that, you got to follow the money. And the first, most obvious clue is the trading volume. It's telling a pretty wild story all on its own.
Get this, on one of the peak days, the volume for RZLV didn't just tick up, it absolutely exploded to 30.5 million shares traded. That's not just an increase, that is a floodgate opening up.
And just to put that number into perspective, take a look at this chart. The average volume over the last 10 days was about 26 million shares. So on this one day, it blew past that average by nearly 20%. That's the kind of activity that makes everyone sit up and pay attention.
So here's the key takeaway from that. A volume spike like this confirms that this isn't just noise or people covering their short positions. No, it signals real conviction, real belief, and as the source material so perfectly puts it, it means real money is entering the chat.
Okay, so we've had a huge move, but does this rally have the legs to keep going? To figure that out, we need to pop the hood and look at the technical indicators. Think of it like a health check to see if there's actually any fuel left in the tank.
So first up is the Relative Strength Index, or the RSI. This is basically a tool that traders use all the time to see if a stock's run-up is getting way too hot and is due to cool off, or if it's really just getting warmed up.
Now here's where it gets really interesting. After a 24% jump, you would think the RSI would be screaming overbought, but it's not. Not even close. The stock was so beaten down before this rally that this massive move has only brought the RSI back to a neutral 40. It suggests there is a ton of runway left before this thing gets overextended.
And it's not just the RSI saying this. Other key indicators are flashing the same signal. The Williams %R, another momentum tool, has just bounced hard off the extremely oversold floor. That's a huge sign that the sellers are just done. They're exhausted. At the exact same time, the MACD is curling up, which confirms that the momentum has officially flipped from negative to positive.
So let's just put this all together. You've got the RSI with tons of room to run. You have the Williams %R showing that sellers have tapped out, and you've got the MACD confirming a bullish flip. When you see all three of these major indicators pointing in the same direction, that is a very, very powerful signal that the trend has truly changed.
Okay, so the rally looks healthy, it's got fuel in the tank. What's next? Well, now we head to the battlefield. This is where all that retail buying pressure is about to run head first into some massive walls put up by the big institutions.
And the first and biggest of those walls is right here, $3.12. Now, this isn't just some random number on a chart. It represents a major technical barrier. You see, that 312 level is the 200-day moving average. For the big money, the institutional funds, this line is practically everything. It's the psychological dividing line between a stock that's in a healthy uptrend and one that's in a downtrend and gets filtered right out of their models. Breaking above this isn't just a win, it's a game changer for the stock's long-term story. Now, if the bulls can actually manage to break through that first wall, their next major target comes into focus, and that's $3.54.
So this higher price is the 50-day moving average. It's what's called a strategic gap fill target. Basically, it's a price level where the stock took a sharp dive in the past, and getting back there would be a huge victory for the buyers. So keep an eye on these two levels, 312 and 354. They're the whole ballgame right now.
So now that we know where the battleground is, let's talk about the game plan. How could this all play out day to day? Let's look at the playbook for both a continued breakout to the upside and for a potential and probably healthy pullback.
For the bulls, the plan is pretty straightforward. It's a three-step mission. Step 1, take back that big psychological $3 level. Step 2, push past the previous day's high of 307 to show you've still got strength. And then the final and most critical step is to break and, this is key, hold above 312. That's the move that could really put the pressure on short sellers.
But, and this is a big but, none of that bullish scenario happens without one key ingredient, volume. For this breakout to be the real deal, the daily trading volume has to stay way up there, decisively above 20 million shares. If it drops below that, the whole thing could just be a fake out.
Of course, stocks rarely go up in a straight line, right? So if we do see a pullback, here's the defensive plan. The first line of defense where buyers are expected to step in is around 280. If that doesn't hold, the next major support zone is 265, and the absolute final line in the sand is 256.
So here's the bottom line on that. As long as RZLV stays above 256, which was the low from the previous day, the bullish structure of this move is considered 100% intact. Any dip to those levels isn't seen as a breakdown, but actually as a potential buying opportunity. And really, that brings us to the core strategy from this analysis. After a move this strong, the mindset completely shifts. Now the idea is to view any temporary dip, any red day, as a chance to accumulate, or, as they say, to reload for the next move up.
And that leaves us right here with the ultimate question. The battle lines have been drawn. That big institutional wall is sitting at $3.12. All the momentum indicators are lined up and ready for a fight. So the only question that's left is this. Will the retail army show up with enough sustained volume to break through and actually win this war?